Welcome to Illuminati Silver. We tell the truth about silver. Today is Tuesday the 2nd of March 2021 and we're looking at silver and gold falling even further but also recovering somewhat, and whether we should be concerned or not, and what direction can we expect for their prices during the coming week. So let's take a look. Now firstly, just a quick shout out to the two videos we produced on Sunday. Why green investment, biodiversity and climate change could be silver's saviour, and Bitcoin versus gold and silver episode 13, Everything is Falling, where we look at the potential future direction for Bitcoin, gold and silver, and we've placed links to both of these below. Now yesterday we did not produce a video, and what happened? Gold and silver fell. And they've done so again earlier today, but all is not lost. Gold closed last week at $1,735. Yesterday it closed $11 lower at $1,724, and today it fell as low as $1,707, testing that $1,700 floor, though currently it has recovered back to $1,735. Silver closed last week at $26.90. Finished yesterday at $26.59, so down around 31 cents. Fell earlier today to $25.91, so breaking that 26 floor, but is currently resting at $26.77. So it's just down now 13 cents from Friday's close. We did say in the weekly update that we were expecting a larger range between highs and lows for silver this week. The dollar index is down today by 0.31 at 90.72, and equity markets are broadly lower, somewhere between 0.2% and 1.3% down, depending which index we're looking at. Now yesterday, improving PMIs were reported, with the market manufacturing index up 0.01 to 58.6% for February, and ISM manufacturing up 2.1 at 60.8. Construction spending is also higher by 0.6% at 1.7% for January. Now we have the February ADP employment report tomorrow. That's very important because it will give us a very good indication as to what the non-farm payrolls report is likely to be on Friday. And the two services PMI are also being announced tomorrow, which will be interesting to view in light of the manufacturing PMIs announced yesterday. So what's happened with gold and silver then? Well, we did report in our weekly update to expect more volatility in silver, but a slight downtrend overall, and particularly in gold. Now we've stated that for gold, $1,700 is strong support, and the bounce from 1707 today has just shown this, though 1 or 2 days frankly is not enough time to fully collate the weekly trend. Lower treasury yields and a lower US dollar allowed really for the bounce back later today. Technically though, indecision dominates, and this is really sort of extrapolated because we've had a lower low and a higher high price volatility range. That's suggesting a degree of indecision. Again, you cannot take one day's movements to dictate the trend, but it's interesting to note. Resistance is seen at 1765, and again at the 10-day moving average above that of $1,778. Support obviously lies at the psychologically important 1700 level, and beneath that the June's low of 1670. Again, we highlighted these figures in our weekly update. Now, our suspicion, unless there is further dollar weakness, is that gold will continue to be under pressure for the next day or so. That said, we saw an interesting commentary by Dr. Arnaud de Teixeira on FX Empire today. This is what he said, quote, "Bottom line, shorter term, I'm looking for a somewhat tricky whipsawing move higher, ideally to around $1,820 plus or minus 40. From there I expect several weeks of downside back to 1620 to 1680. After that, I anticipate the next primary V rally to $2,300 plus or minus 100. However, a weekly close below $1,605 targets $1,495 and strongly suggests a primary V wave may not happen as the decline is almost too deep, and hence at current price levels the risk reward for gold on the long side is IMHO 120 over 600, which equals 1 to 5. Unquote. Silver seriously tested support today at the 25.85 level, but rebounded and surpassed the 50-day EMA resistance level of 26.45. Its next resistance level was 26.70, which it is holding just above. And then the 20-day EMA at $27 above that is the next target. Now, if that is breached, then we could see silver head quite quickly towards 27.50. Now, 26.30 would have to be breached lower before the 25.85 level again is headed for. And there are numerous support levels below that figure, including 25.55 and 25.20 before hitting that psychological support level of $25. Now, an interesting statistic for silver holders is that silver in February set its highest month average price since March 2013, and that stood at $27.35 per ounce. And with an economic recovery allegedly around the corner, many analysts believe this average will rise in the months ahead. Now, on the banking front, and this is important for consideration because analysts will be looking at this quite closely, EC board member Fabio Panetta said today, quote, "The European Central Bank should expand bond purchases or even increase the quota earmarked for them if needed to keep yields down," unquote, after weeks of steady increases in borrowing costs. Australia's central bank today affirmed its pledge to keep interest rates at historic lows as policymakers battle to stop surging bond yields from disrupting the country's surprisingly strong economic recovery. And after a sharp sell-off last week, US Treasuries have stabilized, with bond market indicators and derivatives positioning pointing to near-term calm. But an improving economy could trigger another slide in their prices. US Federal Reserve Governor Lael Brainard said she was closely watching bond markets and would be concerned if a recent rise in yields continued and began to constrain economic recovery. So clearly the expectation is to try and ensure yields remain as low as possible, at least until the recovery is fully, completely, and guaranteed underway. Now, it would also be inappropriate for us to ignore the political dynamic, particularly in the US, which includes the $1.9 trillion stimulus package being considered and President Biden imposing sanctions over Russia today. Also, the head of the US Centers for Disease Control and Prevention, CDC, said she was concerned by recent COVID-19 data which suggests the spread of highly contagious coronavirus variants is threatening to fuel a potential fourth surge of cases in the United States. Dr. Rochelle Walensky said about 70,000 new cases a day had been recorded last week, a very high number. There were nearly 2,000 deaths a day in the same period, she added. Quote, "Please hear me clearly. At this level of cases, with variants spreading, we stand to completely lose the hard-earned ground we have gained." These variants are a very real threat to our people and our progress, unquote, Dr. Walensky said. Now, all of this simply adds some confusion to the assessment of the US economy in the weeks ahead, particularly as it certainly looked like a plain sailing recovering economy. There are some doubts there now. Now, our overall assessment, though, is really that the economy, particularly in the United States as well as globally, generally will continue to improve, particularly as the vaccine programs are delivered. And this is what markets are expecting. Of course, if that does not happen, then we will see almost a complete turnaround, particularly in equities. Admittedly, we are growing from a lower base pre-COVID-19, but perhaps to some degree at a faster rate than many anticipated maybe 3-4 months ago. Meanwhile, there is a plethora of economic data being announced this week, all of which is likely to have some bearing on the US dollar, equity markets, and gold and silver prices. So nothing has particularly happened in the last 2 days for us to change our sort of trading range for gold and silver, which we announced in our weekly update last Saturday, which we urge you to listen to if you haven't already done so. Meanwhile, thank you so much for listening. Please subscribe to our channel, and until our next video, stay safe. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.